Good to see you here.
Pleasure.
Do you want to introduce yourself?
Yeah, we just launched Europe's first dedicated semiconductor and photonics fund back end of last year. I've been investing, I like to say, in, I suppose, deep tech is the right term, although it's a terrible term, for over a decade now. And set up a fund in 2014, which was focused on cryptography, which was subsequently subsumed into crypto, which was interesting. Started to invest in AI in 2019 with Luna Ventures, again quite early. And I feel like this is my third act where I'll be investing in semiconductors and photonics, again, I think early, going into the second half of the 20s.
Did you invest much personally in crypto back in the day?
Do you know what? I was scared of it. Even though the fund did. I was young, didn't have much money, so certainly didn't put much in, but I was in and around the right spaces at the right time, yeah.
I only realized recently that Ethereum was a Teal Fellowship. Vitalik was a Teal Fellowship fellow.
Isn't that interesting?
Yeah.
He was writing for Bitcoin Magazine. Funnily enough, I got involved because I was at Intel as a strategy consultant, just helping in Portland. And the task, I looked back now because I've downloaded everything that I've ever done to put as context in MD files for Claude.
Right.
So I've looked back everything I could get access to. And I did a project, for Intel, where I interviewed 20 people about, I think I called it at the time Bitcoin and crypto tokens or something. Anyway, and interviewed Gavin Wood, interviewed like some of the very, very early people in Bitcoin, which was interesting to go back and see what I got wrong. An essay coming up soon is basically titled What I've Got Wrong Over the Last Decade, which is quite interesting.
This is on your Substack?
State of the Future.
State of the Future, worth checking out. Very good.
Thanks, Paddy.
Lawrence writes really, really well. So Cloudberry, I guess Europe's first semiconductor fund, very narrow in terms of thesis. I kind of agree with you on this thing of the bifurcation of venture. I mean, obviously, with what we do at Odin, we're big believers in like backing and working with emerging managers that fit that thesis. So you either need to be boutique, small, focused, right? Obviously, that's part of it.
Yep.
Why semiconductors specifically, and why now?
Yeah. So as I've been a researcher for a very long time, a decade or so. I think basically by that I mean I'm always interested in new technologies, technical readiness level 4 or 5, like early in the lab. I'm not just an expert in one thing. I'm the generalist, I like to say. So I've always done this horizon scanning project. That's where State of the Future come from. It was a project at Luna where the brief was go away and look at every technology that you can find and find a methodology to score it and figure out what we should invest in.
I remember we did a talk about it at Newspeak House.
And I had I think there was deep geothermal energy came up. I think fertility technologies came up, which I thought was interesting. A few other things. One of the things you may remember was, I don't think I called it AI accelerators at the time, but it was probably something along the lines of machine learning accelerators. And so I became radicalized to this opportunity. I could have been interested in a deep geothermal fund, maybe, but that seemed maybe too niche, or a broader semiconductor fund. And the core insight is there's a market gap. So two things. One, there's the market demand side is blowing up, predominantly because of AI. And AI brings a whole new workload. It requires extremely high throughput, low latency. It changes the dynamic of the workloads, meaning all of our chips need to change. Pretty much, right? We had CPUs, then we had GPUs. They were sort of fine.
Right.
And now we need a whole new bunch of infrastructure to enable this new application.
Right.
So for me, the demand changes. So that's a new opportunity. And then on the supply side of capital to fund those companies, sitting at Luna for a few years looking at pre-seed and seed investing in semiconductor and photonics, there's just a huge gap. There's A funds, maybe that need to wait to see once the chip's been made. Sure, we're happy to fund it once it's been de-risked. But the stage before the chip has been made effectively, it's just a desert.
Which is kind of funny given that like the first VC firm ever was a semiconductor investor.
And it's called Silicon Valley. I know,
Right.
It's funny. Yeah, exactly.
Right.
But it's because funds that emerged over the subsequent 30, 40 years were in my view, they're bespoke funds for very specific type of venture capital. And they moved away from that hardware. Honestly, we just had an amazing opportunity for the most scalable, most high-margin set of technologies of our generation. And so it made sense that there were so many funds dedicated to that, because actually, if you look at semiconductors, first principles, it's a less attractive investment area at pre-seed, higher risk, higher capital intensity, more difficult IPO market. So from first principles, you'd say our software and SaaS seems like the place to be.
Yeah.
But I think as we've seen...
Well, it's done now, isn't it?
I mean, you could say that. I mean, if you want, that would be my claim. Yeah, we're sort of done. So you have to, I think we might have just timed the market well.
It seems kind of obvious that, like, AI means you can just generate lots of software. Unless you've got strong network effects, it's hard to have a moat in software. Mm-hmm. The moat of having lots of engineers that can, produce this software that no one else can produce is kind of gone. I still think you have embedding in workflows, and that's relevant for some SaaS.
Yep.
But what that says to me is like, okay, maybe you end up with like lots of smaller niche SaaS products, but they're not venture scale. Mm-hmm. But what becomes interesting is, okay, what can you do with lots of intelligence that you couldn't do before? And that's all really in the built world. And there's also so much geopolitical pressure on that happening anyway, right? We need to reindustrialize, we need to create more jobs in the West, and fix broken Britain and fix the Rust Belt in the US, and this is the whole thing that the Trumps and Nigel Farages of the world are getting into, positions of power on. So it just feels like directionally everything's pointing towards that.
To the physical world, yeah exactly. Yeah. And then I think just from a pure, VC mindset, if I'm thinking I'm investing seed, and so I'm thinking 10 years ahead, I cannot imagine investing right now with any certainty in a software product. Yeah. Whether or not the model providers do it themselves, whether or not we continue to scale towards AGI, even if there is some differentiation, whether it's network effects or moats around regulation, it feels like a much weaker bet than making a chip or making an interconnect in a data center, or building a new fab, or building a new SMR, right? It just it feels a much less risky bet, actually, in a way that maybe 5 years ago would have been a much more risky bet, right? It's just totally changed.
It's like, does Claude or Google or whoever just eat your business overnight? I think even if you're an AI native piece of software, I think that's just such a risk.
And what's the? I mean, we for years thinking about what could the moat be, and listening. We're interested to hear what is the moat from all these founders we speak to. What's the moat? The speed of execution, running really fast, living in San Francisco.
No,
like there is, as far as I can tell. I mean, maybe it's out there, but I really think everybody's alighted on fundraising, raise more money. Yeah. Seemingly is the only bet that we have for a moat.
Scale is a moat, right? Once you reach scale, that comes with like process systems understanding that it does create defensibility. So you can try and speed run that. I think it's probably tricky.
I mean, that's the best bet we've got. Whether or not I'm still happy with my bet, which is photonics and semiconductors. Yeah. Where you make a thing, make a widget, sell the widget. Here's your margin. There's the customers that want to buy the widget, and if anything, it's a much less risky bet unless you believe that data centers are just going to stall out and we're not going to build any more data centers. For me, I feel like that's not as obvious as fertility rates continue to decline or energy or electrification continues, but it's not far off. We're going to build more data centers. We're going to need more widgets for those data centers, and there's going to be someone that needs to build them.
So a couple of questions on that. So I've heard you talk about this before, but there's kind of the different paradigms of what you think about when you think about semiconductor investing. There's the big capital intensive, okay, we're going to try and take on NVIDIA or whoever with like a new model for chips. Mm-hmm. And then there's all these kind of like niche use cases where you might need a specific chip for a specific use case, maybe using a specific type of material.
Right.
Maybe it's for edge computing. Is that how do you think more about those spaces?
I think the simplest macro framing is to say that we've known for a long time Moore's law is topping out from an economic perspective. So we can continue to improve transistor density, which is we can continue to make chips smaller and more performant, but in order to do it, every generation costs more. Right. So now, to continue to improve silicon CMOS, which is pretty much what the entire compute industry runs on, we need to spend more. And so the bet of the next decade is that there's a couple of things that are addressing that. One is so-called chiplets. Which is this idea of...
Legos, is it?
Yeah, you probably heard of chip Legos. Right? It's a nice little framing, but ultimately that's it. But the core reason why you have chip Legos is because it's really expensive to make one big chip, because you have to do it on the same node process, right? Which is expensive. So what about if you just send this small bit over here to a cheaper node process, this small bit to another process, and then you package them up? That way you should be able to get the same or better performance at much cheaper costs.
Why is it cheaper to spread it out?
Because, for example, if a 5 nanometer node process on TSMC, which is all these AI chips, maybe that costs 100 million for a tape out. I mean, just to give rough numbers. If you were to go it on a 22 nanometer node process, it might cost you a couple of million.
Okay, so only bits of the chip that's formed from the chiplets need to be on the 5 nanometer process.
Exactly,
versus,
and maybe none of them, or it depends. And so that's the one part. You bring it all together. And in that bringing all together, the devil's in the detail. Lots of new technologies required for that. Right? You need to package it up. You need to stack it up in sort of layers, 3D.
Right.
That's basically the whole AI boom, in my estimation, has been enabled through stacking. And the people probably don't know is HBM, high bandwidth memory. Right. High bandwidth memory is not really an innovation not in the tech. It's just we learned how to stack memory chips on top of each other.
Without them overheating.
Exactly.
Which is
alignment's always been a problem, because you obviously got to align it, and we're talking about...
Do they interfere with each other because of
there's interference, there's noise, a bunch of thermal management actually is probably the key challenge there.
Right.
But yeah, so there's challenges there. How do you mitigate thermal management? Do we need new materials? It's a key insight. Do we need to simulate them in different ways? So in my view, lots of innovation and new products and new technologies required to enable this big trend from one single chip to lots of chips connecting together.
Right.
That's like a macro trend that I think the next decade we're starting to see more and more of.
Tangential question. Obviously, all of this stuff is in the realm of semiconductors. That's a substrate that we've used for this, computation.
Well, silicon.
Silicon,
right? Because actually, semiconductors is anything that conducts, can be
depending
doped
on temperature or whatever.
Yeah, can be doped to conduct electricity at different variations. So when I say semiconductors and photonics, what I actually mean is silicon is one substrate, but we're also interested in other substrates for which silicon is ill-suited. Right. So that could be trying to stick a chip on a battery. Right, so on EVs, you can't use silicon. You use something called silicon carbide, predominantly, a slightly different material, or gallium nitride. So all these things are still semiconductors, but they have different characteristics.
Is there a world where you reach some sort of ceiling because they're all architected in that way? And it's like, we've seen stuff on our platform where it's like wet computers seems to be a bit of a trend, right? Bio-based. Yeah. I saw someone uploaded a copy of Doom onto some human neurons in a Petri dish, which is the most insane. I'm glad I didn't start life as a
maybe that is how it started.
Doom.
Maybe that's how it did start.
True.
So different types of substrates. So good one. Yeah, so biological substrates are definitely one of the paradigms that you would class as sort of experimental novel compute. So the sort of...
Do you think the technology readiness levels...
No, that's wildly low. Right. Yeah, sadly. I mean, I'd love a bet in that space, but that's the sort of thing that you'd have to look for a discontinuous breakthrough that pulls the timeline forward for something like that. Something comes out of a lab that we're unexpecting, which says we've been able to scale this. Because dealing with biology and molecules, it's just not deterministic. Yeah. So you need new use cases for where that non-determinism is fine. But actually, to your point around new substrates, the actual thing that we'll see in the next decade is, yes, silicon, and some of these things for electrification, silicon carbide and GaN, but the key thing is photonics, which you might have heard about. It's a very popular investment trend for sure, photonics. But photonics is, we've had fiber. We can move data in light, and we've done it under the sea and for fiber all the way to the data center. But the key thing we're seeing now is trying to move that light into the data center much closer to the chip. That's all of these companies like Oriel Networks, you might have heard in the UK.
Right. So it's light hitting the chip rather than electrons or something like that?
Yeah, exactly. Because if you think electrons have resistance, so and the resistance means there's heat. So just by using electrons, it's going to be slower and create more heat. If you use a photon, in theory, there's no resistance, so no heat, and it goes faster.
Right.
So the more you can use photons to move data around, the better. That's what we're seeing generally just already. Celestial is a good example, just got acquired, Celestial. There are many others. That's been around for sort of 5-10 years. But we're just starting to see the slight movement of using photons to process data. Mm-hmm. That's new. So it's not just moving it, but actually trying to use the light to transform data. And you know, we can get into the specifics there. But the key point is that photonics cannot go on silicon. Silicon cannot natively create light, so you need different substrates. These are things like indium phosphate and lots of other different types of materials. So when we say semiconductors, we're describing a whole range of substrates. Mostly it's still silicon CMOS, but a bunch of others that are useful for other applications.
How far along is this photonic stuff, and what would the applications of it be?
Well, we already use, for any laser anywhere, any laser, even for computation, but even just for radar or LiDAR or anything else,
right,
it's already wildly deployed.
That's a photonic chip that's receiving the light back.
It was a laser light source.
Right.
So the light source, and we use it for photolithography and stuff. So we have all these lasers. The sort of the insight for how far along is photonics, we have all this ecosystem of photonics to move data around, fiber optic cables, like really cheap, really mature ecosystem. But but it's bulky. That's the way to think about it. It's all in free space. It uses mirrors and lenses, so it's all big, right, on micron scale. The trend is putting all of that onto a chip. So a photonic integrated circuit, just like an integrated circuit, trying to put all of that stuff on a chip.
So there's lasers in the chip almost?
There's a company called Encoding that's trying to put it on the chip. Generally, you'd say for yield, like to make it easier to manufacture, you'd have it just off chip. But you can put it on chip, but you have lots of different components. So you have the laser source, then you have the waveguide. Waveguide's how the photons move, you know, from A to B. So the waveguide's how it stays in where it needs to stay. Then you've got a modulator, so how you sort of modulate the light or move it. Beam splitters. So all these things get miniaturized and stuck on a chip, and then you create a whole new range of applications that just weren't possible before. So sensing things that we can't sense in the world, moving data around in data centers. So for me, when I think semiconductor and photonics, what I'm actually describing is the breakdown of Moore's law and putting photonics on chips. They're like the big macro things that this whole fund's based on.
I notice you think a lot about macro trends, and you think a lot about technologies and where technologies are at in their kind of life cycle.
Right.
I think traditionally, especially in software and pre-seed investing, people will say a lot, it's about the people and the founders. Do you think the balance of like technology market versus founder is slightly different in hardware investing to software investing because you got to spend the money quickly, you don't get as many chances to iterate, that kind of thing? How do you think about that?
The answer is probably. I think about technology too much, and probably on balance, just give the money to the best founders, yes. But that being said, I definitely subscribe to the surfer and the wave methodology, right? So on the one hand, you can have the best surfer, but if the wave's not large enough, it doesn't matter. Whether or not this is a popular view, I don't know, but I'm not always convinced founders choose the best markets. In some sense, and especially in deep tech semiconductors, because oftentimes you need a deep technical well of information to bring these products to market, whether it's a quantum computer or whether it's a photonic chip. You need to deeply understand the technology to productize it and sell it, right? And so I think there's a lot of work that needs to go into making sure you can pick the right waves. I mean, that's been my thesis for the last decade or so, whether or not, I still think the jury's out. But I think that you could give money to amazing founders that may be working in a really hard technical area, and they may say, we'll solve these really hard technical problems. But I'll tell you what, a good example. make it concrete. So we talk about photonics, and we mentioned being able to process data in photonics. In theory, if you use photons, not electrons, you can do matrix multiplication much faster, right? Which matrix multiplication is the basis for all GPUs and all inference right now. So the core principle would be, if you could use a photonic chip instead of a silicon chip, instead of a GPU, you could do all AI inference much faster, much cheaper than anyone else, right? So first principles, you'd say, if you were to give money to an amazing founder to just do that, you got a good shot. You say yes, but from my perspective, from looking at the sort of technology and readiness level, I'll know there are probably one or two problems that aren't solvable by money. You can't just throw money and solve photonic memory. For example, we still don't really know how to store photons and read and write fast enough photons to be able to create an all-optical processor.
Right.
So that's just a good example of, yes, founders, really important, but in a specific example, there's also a hard technical challenge that aren't just solved by money. Money isn't the moat in the way it was in software, right? It's not just blitz scaling. Throw money and all the problem is just hiring enough people and scaling fast enough. Here you have hard engineering problems that actually gate progress, and it doesn't matter how much money you throw
It's
in.
a lot more technology risk versus market risk.
Yeah.
Does it look more like biotech investing or something like that?
Exactly like that. In fact, I think there's something really interesting to write and explore around. I think it's the first thing to say is yes. If you're looking at semiconductor and photonics, you should think it looks much closer to bio. The thing about bio is I think it's much more mature. So you have very clear value inflection points that the market understands and the market funds to the next stage, and there's a much clearer M&A market.
You kind of know exactly what the TAM is before you
know,
developing
and
the product, don't you?
hit that, and we can sell for this price.
Yeah.
So I think it's semiconductor and photonics is much less clear, but the key insight to what you've said is the idea that you invest in, say, our fund, 20 companies, and the winners will IPO. Right, like in software, I think you have to be much more realistic and say historically, in semiconductor and photonics, M&A is much more realistic outcome. Same as bio.
Because you can't get that thing to market unless you've got another $1 billion of capex to put into it. Or
distribution, really concentrated market structure, but you have lots of acquirers that typically buy for IP, which means that there's quite a large markup. It's not all about the revenue. So I think really deeply understanding that market structure is really important, which is why, to my point on why we set up the fund, is that you can't just be a deep tech fund and say, or a fund and say, we now do semi. Because I just do not believe the fund model enables you to just bundle in and do semi, because you don't have the right reserve structure, you don't have the right IC structure to understand M&A and sales. So I think you need a dedicated vehicle to be able to understand these things.
Yeah, I mean, I noticed a lot of your LPs are from the industry basically as well, right?
Right, exactly. And that's... I mean, I can't take any credit for that, to be frank. That would be my partners. But having Global Foundries, which is one of the world's largest fabs, as an LP, is exactly as you described. On the one hand, it's validation that we're doing something that's valuable for them and for the industry. But I think it helps on one, for me, as you know, I call myself the sort of front end of this fund a little bit, right? In some sense, you know, we've got Rene and Vera who understand the market and have scaled semiconductor companies, and they know the market. So for portfolio support and value add and all that, they're going to be way better than me just running around doing deals. The thing that I've seen as a problem is, as we mentioned, before there is an actual physical thing, all the risks exist. There's no way to know. They claim that they can get, 100x better latency, let's say. Right. That's what the claim is. They've simulated it. And then you say, well, should we invest based on that? Well, how do you de-risk that? You need to know, can it be manufactured, basically?
Right.
If it were manufactured, could they get the same performance benefits? And
so you take that to your LP network as part of the diligence?
It would be, that's the one way to de-risk it. One way to de-risk it is to go and speak to our LPs and other people in the network and say, do you have experience of this? And semiconductor is very, very secretive, all around know-how, all around recipes and how things are put together. It's a lot of know-how, a lot of it's implicit. And that means that you can't just find publicly listed information about whether or not this material can be deposited on this material.
And I'm sure the companies are incredibly secretive about anything they know as well, right?
Exactly. Yeah. So it's a lot of implicit knowledge, meaning network's really important, meaning how LPs can de-risk it. So I'm in a position now, which I never been in before, which is I can look at a company and de-risk it with my diligence in a way that no other fund can. And I think, we'll announce a few deals, and I think it might be surprising because we've been able to find out things that the market doesn't know and that other funds wouldn't be able to know, which gives us, we hope, a competitive advantage.
I wanted to talk a bit about the fund. So you're doing European semiconductors only, or are you deploying outside of Europe?
The focus will be on Europe just because that's where we have the greatest footprint and coverage.
Okay.
I'm just cognizant of the market for lemons often, right? When you see a US deal, why are we seeing it?
Why are you seeing it?
Yeah.
Why have you got access?
So I'm just cognizant of it. I mean, there's a world in which, we've got a good network and therefore a really great fund shares a deal and then maybe we would consider it.
Yeah.
But then there's valuation challenges and why are we seeing it so late? And I don't know.
Yeah.
So mainly we'll focus on Europe, but doesn't have to be.
And I wanted to ask about valuation as well. So you're an emerging manager. You've got a 30 million fund. You're planning to do 20 deals?
Yeah, give or take 18, 22.
And then you've got an interesting reserve strategy as well.
Yes, 70% reserve, 30% first tickets. Maybe we can tweak at the margins, but the core principle behind that is sort of coming around to this view that it's more important that you pick the winners within the portfolio than necessarily the first deals that you do. I mean, we've only got 20 shots on goal, so it'd be different
That's
if you're
quite a lot.
if you're an unruly and you're doing whatever it is, 14 plus. Exactly. So we're relatively concentrated anyway.
Yeah.
So obviously the first assumption is that you've got potential winners in that first 20, right? So let's just take that for red. But then within that, we think we've got a reasonably robust strategy for follow-on and a lot of reserves to make sure that in the case that we are successfully able to choose quote-unquote winners, we are able to defend pro rata. So I'm really minded to sort of what's happening, Accelera maybe, I think they did a B, but let's use this company called FMC in Germany, ferroelectric memory company, and there are others. Lace Lithography just did a 40 million A, I think, that if successful, I don't want to have successful companies in the portfolio and then we get diluted down to nothing. So I want to make sure that if there is a successful company and we're able to marshal it through to an A and they go on and they want to raise 50 million, that we're able to do our pro rata in that company. That's the single driver behind this reserve strategy.
Right.
People will argue, you should just deploy all first tickets, it's better ROI.
Yeah.
But I think in semiconductors, just the dilution effects, and actually you can model it interestingly because it's not like there will then be a B, C, D, all equity. Obviously, part of that, 100 million, some of it might be debt, some of it might be grant money. There's a lot of grant money in Europe. So there's a world in which dilution doesn't look as bad as it might seem.
Or they get bought earlier?
Or bought earlier, and so you get bought at, there is sort of a window maybe around the A mark, where you might get bought for IP and,
But at a decent price, right?
A reasonable price. I mean, actually, if we've done the analysis. Maybe you might have some data that I could use, but maybe not. But I've got a fair amount of data on this, and historically, if you cut out the outliers and you try and find like Mellanox and some others, and you cut out all of the hundreds that were bought for a couple of million, I think a success might look about 300, 400 million. A reasonable success, a good trade sale that might be 5-7 years.
Right. And you're coming in at pre-seed at what price on average?
It's an open question.
Because I've seen Olix raised a seed round at
220.
So what's that at? Like a
billion. I think.
Post?
Yeah, I think so. But I mean, that's a very broad outlier. That's a very strong outlier.
And what was the other one I saw that you mentioned?
What, that did a seed?
There was an A round that was like 400 million.
Oh, Etched. Yeah, that was a Hummingbird one. There's AI ASIC. Yeah, again, the billion. So these AI inference chips I would put in a world on their own. Right. Honestly, I think AI inference is different, and actually trying to find an AI, the next AI inference chip before that run up happens. Right, as a pre-seed investor, maybe it's AI edge. Accelerator is there, but maybe you try and find that before the curve hits. But the point I wanted to make about valuations, I think, is that you want to be giving the company maybe their first spin out money. sort of, maybe they need 1.5, 2 million. That's the sort of range.
Are they coming out of a university or something like that?
There's
Usually?
probably two buckets, and this is what I've learned over probably the past 2-3 quarters, is there's definitely a distinct bucket of spin out from, say, Oxford, Cambridge, Imperial, Bristol, Southampton, Eindhoven, Munich, DTU, Denmark. There's a few different like university clusters, right? And out of that you get professors on the board, and you get like PhD students that spin out.
What's the overlap between those universities and the ARMs or ASMLs or whatever?
Well, the ASML cluster is the Dutch
right.
one, and they have lots of good government funding, and they've got a nice ecosystem. Same sort of down in Bavaria.
A lot of talent coming onto the market soon as well, based on McKinsey talking about.
Oh, right, on the ASML thing.
Yeah,
I mean, there's some interesting about Leuven in Belgium for something like that.
I was saying they should all just put stealth on their CV, and A16Z will give them a.
It's a good way to further
200 million at a billion post tomorrow.
Well, I wonder. I mean, ASML, but then ASML are becoming pretty active in on the sort of CVC. They did the Minstrel round, and there's talks of them doing more stuff as well. So there's some activity on that side. But yeah, the cluster is IP, deep IP, lots of R&D. We're commercializing it. That's actually traditional, where we would have seen things the last 10 years. But I think things are changing in the sense of because of the SaaSpocalypse and software is not as cool as it used to be, we are definitely seeing serial entrepreneurs maybe have done a software company, or founders who aren't associated with any universities that are leaving Meta to do something in optics, or they're leaving not ASML, but maybe ASML, but they're leaving Google to do something else, and they don't have that deep pool of IP, which is how a lot of semiconductor funding happens. But they're maybe. You might go to the traditional VCs that are used to funding, serial founders that look very different. So there's a slightly different pattern.
Related to this, I wonder if there's a parallel with biotech. I listened to an interesting podcast with the guy who funded the Moderna vaccine.
Oh, yeah.
And his view on biotech investing was that, actually the upper bound of exits is probably lower, and the deals are more capital intensive.
Right.
So you need more ownership.
Interesting, yeah.
And they've built very much I can't remember the name of the fund, but they've built very much like an incubator kind of model. And
to do it earlier.
I always think it's interesting when you've got IP, PhDs coming out of universities, not necessarily always very commercial people, or don't have the company building DNA, right? I do think entrepreneurship's a skill you get better at by doing.
Yep.
Although I think having the grit to just do a PhD and survive is a lot of the same behavioural traits, right?
Fair, yeah. So basically, say more ownership earlier on. I think
by kind of venture building those businesses, basically, or taking the Sutter Hill kind of we're a fund, but we've got ideas about spaces where we think there are tailwinds. We're talking to our LPs. Our LPs are acquirers of these businesses and have all of the kind of market map. Can we kind of I also think just this area of venture generally for me is is quite overlooked relative to we've got a ton of capital at the moment looking for a way to invest. You need more ownership.
Yep.
The same's probably true in software as well because the exit values are going to be lower.
Yep.
So is there something to?
So you're saying more incubation? There's two Israeli funds that are doing something similar to this. It's an interesting development in venture, right? In the sense that. A lot of the A funds are doing late seeds, so they're coming down late seeds. And we saw a deal recently out of Switzerland where you start to see a lot of what was effectively a laser company, and a lot of non-traditional investors coming in and throwing more money at the team because they need to deploy larger checks. If you've got a 300 million fund, take 5 million instead of 3. So on the one hand, that for us. That breaks our model, right? So it's because for our ownership, so we might need to go earlier and earlier. So we're basically, I think, going to do pre-seed. It has to be first tickets, which is fine because we're able to do that. But to your point, there's a world in which we have to do even earlier. What's earlier than sort of pre-seed? I would say we've done we're on our fourth or fifth deal, and 3 of those I would describe as inception, right? In fact, 2 of them are just incorporating. So that is inception, right? And then there's an interesting question here around how does the fund dynamics break? Because if you do the incubation, how much ownership is a sensible amount to then reach the next value inflection point? So my concern is, okay,
you need enough cash to be able to follow.
well, maybe
you need
to
be able to
do no pre-seed. You need to be
Yeah.
able to do that and skip all the way to seed. Right? So you need to get to some seed inflection point, technical and commercial, with your capital that enables you to skip the pre-seed. Otherwise, it's too much dilution.
Or you're like, we'll incubate you and fund you all the way to B, C kind of
Founders
range.
fund
Do you know what I
type
mean?
thing.
Yeah,
Just
yeah. From start to finish, we want every round.
Take the bet. I think that's part. I mean, that's consistent with our idea of larger reserves to be able to do that in theory. But obviously, if we had a $200 million fund, which is, we'll see.
Yeah.
Then I think you could be more aggressive on backing it. But that said, I also think at that level of risk, pre-seed inception, having more smart money around the table, having other perspective is also really, really important. I mean, if I'm putting together a syndicate for a round at the moment, I think you want partners, even if you could take the whole thing. So there's a world in which we say we're really good at venture building. We've got the internal capacity, we've got amazing talent that's scaled. We take 15%, for X amount of money, and we keep you going until seed. Are we going to? That's the equivalent of building in a vacuum. That's the equivalent of not getting market feedback. I think you get market feedback from customers, but not from investors. So sometimes I think actually incubation could end up being much riskier than coming in and getting more VCs around the table. But the struggle is, how do you take the appropriate amount of ownership at pre-seed and not ruin the cap table? That's the real challenge right now here that I'm trying to figure out.
And kind of ensure you're going to get enough ownership later on or something like that.
No, just to make sure that you're not being egregious. You could come in and try and get 15% for the risk you're taking, but that with the money you can deploy at $750 a million, you can only get to a pre-seed round. Then they have to do another 15%, 20%. Then a seed round, suddenly you get to A, and the founders are too diluted. So it's more of a question of not taking too much equity earlier on for not enough capital.
I also think the technical and domain stuff, I suspect, is a bit more binary in terms of like the information's out there. I think a lot of where humans can add value is like in the human-to-human interactions, especially if we're talking about pre-seed investing. Like I know that you love digging into technologies and understanding them and stuff like that, and I actually think it's great, right? It's just like you're curious, right? Which is such an important trait, I think, generally, to be good at anything. Curiosity is like a key trait. How do you think about the people and the selection of the people and the traits you're looking for there?
I do have like a very basic heuristic, which I would try to improve, but basically customer obsession. Like I'm effectively, anytime I'm speaking to someone, ranking them in my own head, and now increasingly, like explicitly, do they have any attributes, any evidence that they're leaders? So a leadership capability, and then probably the core one that's the hardest but the best to do at pre-seed would be speed of learning, rate of learning. You sort of need to sample over a time series to do that. You need to do it over 1 month, 2 months. Ideally, you're a Series A investor and you have 5 catch-up calls in a year, and you go, well, and each time I've noticed this, this, and this, right. But I can't do that. But still, that one. And so it's sort of, if you imagine that as the 5 things that I care about, generally I'm thinking if they're world-class at 1 or 2 of those, that may well be sufficient for that. I think the one thing I over-index on is probably the rate of learning, and the one thing that I've traditionally over-indexed on I haven't, is customer obsession. That's the one where I think I missed for years, and I've tried to improve on. And you can just get that from a call. Do they mention the customer they spoke to? Do they tell a specific story about what they learned from the customer? There's like basic things, and I think they're the 5 things I look at.
Do you buy into any of the, let's say, more esoteric ways of assessing founders, where you're kind of looking for traits, things in their history, or it's almost like Freudian psychoanalysis, right? So I think the stuff that Adam Schwabe from episode 1 posts is super interesting about, okay, they've usually pursued something that's kind of odd for a long period of time, even though that was socially alienating, or they've moved around a lot, or I saw someone post, if people have played video games or sports to a very high level, that's a good signal. or like Hummingbird, right?
Yeah, Hummingbird is the
right?
canonical
The
example.
canonical example.
Yeah, right.
What is it? Childhood trauma. That's their thing, right?
But I've tried to get. I think the argument there is that they want a decacorn. So there's a question: if you're going to go unicorn and then you want to bet the farm on becoming a decacorn, you have to have certain characteristics. They're actually optimizing for something slightly unusual. But also a lot of their investments are Teal Fellows, so it's been credentialed elsewhere. So
But don't you think they're right about that? In that, like, venture is a power law business. So if you're gonna swing to hit it out the stadium.
For sure. Look, I mean, who am I to say that Hummingbird are doing anything wrong? They're clearly not.
Right.
They're clearly
They've
doing it
smashed
correctly.
right?
Exactly. And their argument about that being focused on talent, I cannot agree more. And I think if there's any learning over that decade, it's probably that over-indexed on tech and under-indexed on talent. And so, trying the surfer in the wave. So there was just a slight misalignment, probably. So for sure, the person is most important. I think I even say it now. We've created this new fund, and if anyone was to have a thesis on what to invest in semiconductors, it'd probably be me. And yet, I'm saying I don't care. Sure, photonic memory, great, let's get in touch. But beyond that, I'll just listen to the founder, and I'm much more interested in the founder and what they want to build. Some of that is just because I have a narrow aperture. Right, in some sense, I'm already narrowed my funnel to just semiconductor photonics from everything, and also Europe. So already my universe of investable founders has shrunk. So then having a thesis within that is just narrowing it even further to the point of no return. So I think the reason why I'm much more open to sort of whatever the founder wants to build is structural, but also it is, I think, you have to learn from the history of venture, and the history of venture is, generally crazy people with outlandish or weird attributes. Yeah. And I suppose the structural challenges to pursuing that strategy, childhood trauma, is, I think everybody knows this. It's a well-received wisdom, and those founders are eminently fundable. So those founders who demonstrate those characteristics, if every other VC is looking for those same characteristics, they're eminently fundable, and
it's priced in,
and they raise whatever they raise. So I think we have to look for different characteristics and hope that the different ones that we're looking for equally can demonstrate success.
I think this is the constant nature of investing, right? Is like as soon as whatever your source of alpha is publicly known, it's eroded, and
So you shouldn't come on podcasts talking about what alpha we're trying to get, actually. Or don't write about it online. That's something I think about a lot, because the LLMs are just taking everything already. So whatever I post today is in the LLM tomorrow, so maybe I just shouldn't. So that's,
Just to round things off, 3 questions. So my first one is, who is your favourite emerging fund manager other than yourself?
Tom of Geometry, because I always get his surname incorrect, but you can look it up. Geometry Fund. He's just a really thoughtful guy, but also, I think, interested in the technology like me, but I think also on the journey of learning about the necessary need for founder entrepreneurs. He's got a very interesting take on fund model as well, which is very different to mine, and I respect his opinion.
Right. Cool. What's he investing in?
Well, I introduced him as a photonics fund the other day, but it turns out he's not just. He said he'd be happy to be known as the photonics fund, but it's not. I think he does broader deep tech, semiconductor, photonics, that sort of range.
Okay.
And he makes really good investments.
Have you co-invested?
Soon.
Okay.
Soon.
That means
I
yes.
hope. Yes.
Second question: any advice you have for emerging fund managers? Maybe at the point you were at a couple of years ago, where you're like, okay, finding your next thing or thinking about your next thing.
I do think having an extremely differentiated take. Like I always say, the reason we exist is, when I'm explaining it, what's your reason to exist? Because, I mean, a deep tech fund or focusing on physical AI, like, I suppose historically, we were Europe's first dedicated crypto fund. That was wild. And then we were like, to be fair, Lunar Ventures, for which I wasn't a GP, but they were going around. There was deep tech in 2019, which was pretty differentiated, and then over time came commoditized. Here we are, probably first to market, will become commoditized. I think having a very differentiated view of what the fund is and why it's different because every venture fund says they add value, they've got great partners, great. It's all the same. You need to be really, really differentiated. And I'd say bet on one niche that you know really well.
Do you think that niche changes?
Yeah, it could be brain computing interfaces soon if the market's right.
Yeah.
Could be nuclear fusion fund. But I think you said
it almost
earlier
needs to change to stay ahead of the curve on alpha as well, right?
I think so, yeah. And we thought about that a lot because we were going to be called Semi.VC. And we decided it might be too focused on semiconductors,
right?
And that by Fund 2 we may want to tweak it, and so hence we stuck with Cloudberry, which is a broader term. But I think yes, focus on the niche, which is why I've always thought research in VC is so important because it means you can constantly stay ahead of that next new thing. In 3 years' time, it may very well be brain computing interface.
Yeah, and I think just being curious and always being someone who wants to learn and wants to discover, right? I think that's so important. What does the world look like a decade from now if Cloudberry executes well on its strategy? What's your vision for the future?
I hope to have significant DPI in a short enough timeline that once AGI arrives, I'm fine. And my family are fine, frankly.
And your LPs are fine.
And my LPs are fine. Well, yeah, sure. Okay. No, I'm obviously joking, but I'm also not entirely joking. I do feel like things are moving really fast. This is it. In 10 years' time, right, for us, 12 years probably, right? 10 plus 1 plus 1. What does the world look like? I have absolutely zero conviction in any particular area. I think the single best thing you can invest in is turning energy into intelligence. Like that's the macro. That's everything. Right now, we somehow, if you invest in more energy generation, great. How we turn that pipeline into intelligence, which is chips and lithography and all the machines that turn it into chips.
Or making people, that would also achieve that goal, wouldn't it?
Fertility, yeah, that's one, but that's a longer.
Turns energy into intelligence.
Yeah, that it does exactly. But just I think it's the slower feedback loop.
Very efficient.
It's actually not that efficient, is it?
Right.
In terms of it takes 20 years.
You're quoting Sam Altman on this one.
So I shouldn't. Yeah, I got caught up there. But it takes 18, 20 years before they become economically productive, whereas agents could be much faster. That's the single biggest thing we can do in the next decade. And to make a point we haven't made, I am strongly of the view we should do that here in the UK. And in Europe, partly because I have 2 kids that I want to grow up and live in the UK. So I think that doing this in the UK and solving some of the energy problems, and the turning it into intelligence problems, do it here in the UK is what we need to do.
Yeah. That's a super exciting point to finish on. I think the interesting thing about the UK's problems is they feel so solvable. We're like a couple of small policy changes. We've got all the talent. We've got all the infrastructure's kind of there. We actually have oil reserves we can make use of, right? We've got a way to bridge this gap on the energy side. It's just about the will and the policy decisions to make it happen, isn't it?
Yeah, and I think I'm optimistic because I think we have woken up. At least in Europe, and then in the UK, I think it's clear that we can't continue on the path we've been on. Like inertia, like in some senses, you can't just keep calm and carry on in this trajectory. Yeah. So the question is, when is there a dislocation significant enough that people realise that we need to, invest? We shouldn't just throw 10 million at the problem. We need to throw 1 billion at the problem.
We need a World War II sense of urgency.
For whatever it is, it's an emergency.
The feeling I think people need.
I honestly think the AI will drive that, whether or not it's through job automation or whether it's through some major cybersecurity event. There'll be something.
The crisis is necessary in some ways.
I think so, and then I think, as you said, we've got all the right resources here to at least carve out a very significant chunk of the future economy. I think that we have talent, and in my view of the world, where it's not a population problem, where it's actually just turning energy into intelligence or energy into labour, you don't need to. The population becomes less of an issue. And it's just political will and it's talent, and those 2 things I think can get us very far.
Yeah. Well, on that note, Lawrence, great to have you on. If people want to find out more about you and your work and Cloudberry, where should they go?
They should go to cloudberry.vc. one of the two Cloudberries. We're the ones that do semiconductor and photonics. And State of the Future, Substack. That's where I write every week. Me, not AI. I hope, for the foreseeable future. And that's where I write about all these weird, esoteric, semiconductor-related events. But also, I intend to write about brain-computing interface, fusion, which I've written about in the past. So anything weird, esoteric, and interesting, you'll find there. Thank you very much.
Thanks so much for your time.
Pleasure. Thanks, Paddy.